Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Wednesday afternoon, and a very warm welcome to the COB. I'm Nadine Blaney. It is wonderful to be here with you on a day that we are seeing positivity for the local market. Tempered positivity, I think it's fair to say. So check this out. Going into the 11:30 time stamp, we were up by about 1.2, just flirting with some of those, more, I guess, punchy positive momentum. But then you see at 11:30 we had this dip, and that was when the inflation read was released. Now, I have Mark Gardner from MPC Markets here with me to discuss that in detail, but safe to say, did put a dampener on some of the gains that we had seen early on. Market trying to fight back through the afternoon. I think I just heard my colleague Andrew Gagan say, but look, I still don't want to take anything away from today's performance. Up by 0.7%, week to date, up more than 2%. I had a chat with Tony Sycamore from IG a little earlier. It's online if you'd like to take a listen. He follows the charts, and he reckons that the setup is pretty positive for the ASX 200 through to the end of the year. Now, not everybody agrees, clearly, but nice to know if that's where you're, where you put your faith in some of the technicals for this market. But let's get to some of the fundamentals, and that really dictates the three themes today. Because what we are is an inflation nation, it seems, so that the new inaugural monthly full data set on inflation coming from the ABS today, showing that inflation is running hot, coming in above expectations and way outside of the RBA's preferred 2 to 3% target band. We will discuss. Also, retail returns. Maybe that one should have a question mark after it, because it really depends what retailer you're speaking of. And Harvey Norman, Temple & Webster, tale of two cities, Temple & Webster, the stock of the day today. So lots of analysis coming up. And here's one that I'll be discussing with my guest. Is it a turkey trap or a Thanksgiving trap for market turkeys? I'll explain what that means in just a tick. But it does feel like things are going very swimmingly this week on some pretty stale data and comments from a Fed Governor Williams, which has, as you know, really increased the chances of a Fed cut coming through in December, at least according to market pricing. Does the market rule? We will find out. Ruling the market today, though, sector-wise, I think by the end of the day, still remains healthcare. Look at Ramsay Health. Market participants really buoyed by the update coming from the company. I think it was yesterday. So that helped to lift the healthcare space overall. Banks were a bit more mixed, as you can see, with ANZ up by 0.25%. Macquarie, though, really punching the lights out, up by 3%. I didn't see any news associated with that. I wonder if it's just sentiment around the States. Now we've got the miners looking pretty good, as far as the big miners anyways. A little bit of an exception to the rule, though, I think, coming through with these gold miners. Northern Star, Evolution. Actually, apologies, they're looking pretty good right now. I had a great chat with Brian Chu from the Australian Gold Fund. If you're into gold miners, you should seek that out on the website, ausbiz.com.au. And also, interesting to note, he names a bunch of explorers and developers he reckons should be on your list. So there you go. There's a bit of a look-see at what happened on market today. Late breaking in terms of corporate stories, National Storage REIT has confirmed it has received a takeover offer from a Brookfield consortium at a $2.61 billion valuation. Security holders would receive $2.86 cash per stapled security. So it's granted exclusivity to the consortium until the 7th of December, determining that it was in the best interest to give that consortium access to due diligence information. Elsewhere today, on that retailer's theme, a new record high was set early on for Harvey Norman, with July 1 to November 20 sales revenue up 9.1% on year. I wonder if just the changing expectations around rates here locally might have dampened some of the enthusiasm. Temple & Webster, zero enthusiasm right from the get-go, losing the most in more than 9 years on slow revenue growth. Flight Centre has a new loyalty program. We'll leave that there. I'll let them do their own advertising, but it did help push the share price higher. Fisher Paykel rising on lifting its FY outlook, and Select Harvests, the almond producer, hit an over 2-month high on strong annual results. Crisis is the exception to the rule on this page. Its substantial shareholder, the CSIRO, has cut its stake. Remember that Crisis was born out of CSIRO technology. Synertech Corp up a punchy 25% on a contract win with Shell. And to what the brokers are saying now, Bendigo and Adelaide Bank, according to Morgan Stanley, may face higher costs on that anti-money laundering probe. And we've seen a downgrade coming through from Accent by Citi. Didn't do too much to damage its share price, up by 7.5%. And at the bottom there, I think that's Volt. Volt had a broker re-rating. It's up by 6%. All right, so there is some of what you need to know. To explain it to us in more detail, welcome to the COB, Mark Gardner from MPC Markets. Mark,
good afternoon.
Hey, nice to see you. What a day.
Yeah, it's been a bit of an interesting day. Some snakes and ladders going on.
Yeah. Let's start with the inflation read, because you are an experienced bond guy. What are bond markets telling us about the prospect of an interest rate hike now here?
I think we're a long way off a hike, but I've always sort of said the market's a very different environment these days, and now I'm going to show my age here. Pre-2007, we would be talking about hikes. Inflation at these levels, the RBA wouldn't tolerate it. In this new era, coming off 15 years of essentially emergency rates and being fairly addicted to very cheap credit, both in the housing market, in the stock market, etc. And your largest voting bloc being the boomers, who own a hell of a lot of property. You don't want to annoy them, so rates have sort of sat there, and increasingly central banks have been politicised. So it makes Michelle Bullock's job and the RBA's job very hard. Same with the Fed, because they used to be just left alone, and the likes of Donald Trump very much politicising it. He's got up to 2 to 3 appointments if Chair Powell goes and actually resigns. Not just from the chair job, but from the FOMC. It's up to 4 appointments he's going to have in May, which again, you rely on your central banks to be the adults in the room. And inflation is high, and it here at the moment, and asset prices are still very high, and we're getting very stretched on mortgages. I think it's responsible for us to remain rates up here. I can't see them hiking, and just on the back of there is evidence around certain elements of the global economy softening, and I just think they'll be in a wait and see mode. There's usually about 500 odd days between cycles, yep. So I can't see. I don't think it's on the horizon anytime soon.
Well, anyways, it will be a live talking point, no doubt, for the foreseeable future. Look, the market is really obsessed with this notion as well that we're going to now see a Fed cut coming through in December. I had a really interesting conversation with Elias Vivek from Tasty Live earlier. He was quite skeptical about the eventual cut, because a lot of the data that we're going off is stale. But he was also really scratching his head about this renewed enthusiasm in equities. He reckons that there's a possibility that this is sort of a squaring up before the Thanksgiving holiday, before all that liquidity comes out. He reckons that perhaps we've got 48 hours or so before we start to get yet another reckoning, even possible come Monday.
Yeah, I saw that interview and I couldn't agree more. The reasons for this going from a 20% chance of a rate cut in December to 83% chance of a rate cut are very, very thin. And Williams he's a known sort of dove, really. Anyway, normally you would see that sort of reaction to someone who was a hawk that turned, and for those hawkish is people who are very conservative on rates, and obviously dovish being more prone to easing rates. But it was fairly in line with what he said, and they're ignoring the other 6 or 7 members of the Fed that said that there was no rate cut coming in December the week prior as well. So it's a very convenient pickup of it. I think we do have a bad habit these days, because content is so fast and media is so fast that when the market just moves up, then you have to find a justifiable reason for it. I don't think that we're I think it's closer to that 20% chance of a cut. It is September data. The October data is going to be far more important, not just from a recent relevancy standpoint, but all of the layoffs for the labour market. The S&P 500 companies alone have announced close to 300,000 layoffs in October, and Apple's now announced some as well on top of that, and then you've got the rest of the economy. So, and I don't imagine when the government shut down, that's doing a hell of a lot for business confidence. So, I think it's a very thin investment thesis, and I couldn't agree. Turkey trap, I think, is what he called it. But yeah, I would be very wary buying here. I mean, I think it's a little bit different for the ASX. We've drifted off. Well, not drifted off. We've been hit a lot harder, particularly in the small cap part of the market. There's some really good bargains for Technology One, WiseTech, and things like that. I think are trading at really good multiples at the moment and haven't really recovered. So I think there is still value in the Aussie market. I wrote in the newsletter yesterday, there's a reason that the private equity companies are coming up with a new bid in our market all the time is, there's just a lack of support there.
I mean, we've seen that this week alone. And today with National Storage REIT.
Yeah.
And if you're wondering what newsletter he's speaking of the COB newsletter.
Correct,
and if you don't get it to your inbox every afternoon, I don't know what's wrong with you, but I digress. Mark, shouldn't laugh. Is there value in Temple & Webster?
Look, I also saw, which we're about to see now, it was stock of the day. I do agree. I mean, it still had good revenue growth. I mean, you want to try and, it's not a software as a service business, but you can kind of apply Rule of 40 to it a little bit in terms of, growth and EBITDA margin and things like that, which it doesn't score particularly well on. But 1.6 bill market cap, it has shown consistent growth over time. 30% is a lot. I think it's more of a reflection of if you miss, you get belted in our market these days. I think that's just algorithmic trading and a lack of just general passive support from fund managers and stuff in that section of the market. But there's, you can make the same argument that Life360 at an $8 billion market cap or $6 billion with a tenth of their net profit is far more overpriced. So, it's I guess it's horses for courses, but it's a quality business. I'd be waiting for things to settle down. I do think this is a bit of a turkey trap and it's down 30% already. I think you've probably got a few weeks to make that decision, but they've tended to bounce back quite nicely, and that there's a renovation part of that website that's growing at 40%, which is a new part. They're not bad numbers. I think the market just expected a bit too much, but watch list. Or maybe have a nibble in the next couple of weeks.
Okay, all right. Just to round this out, Mark, what are we looking for next, or what are you looking to say tonight in the US to either confirm what you're thinking about the direction for markets or the opposite?
I think we're going to get some soft US economic data. We sort of rejoiced around the government shutdown, but they've only pushed that to January 30. We started to see weakness in Nvidia. Google's sort of propped it up a little bit over the last couple of days, but there's now skepticism around, how much. I mean, capex is through the roof for those guys. Generally, when you get periods of really high capex, even the hyperscalers have underperformed in the past because the market expects too much too soon. So I'm basically, I don't think there's no bubble. But I think there'll be a dip buying opportunity at some stage in the next couple of months, and I don't see the risk reward very positive. I think you've got maximum maybe another few percent upside, but there could be a 20% freak out. You never know what Trump's going to do. We're going to roll into probably another government shutdown in January. We didn't have any seasonal weakness in October. So we're about 30 to 50% cash at the moment.
Wow.
And not because we're necessarily really bearish. We've just had a great year and we're banking some profits and I just think that Trump will probably he can blame the Democrats and he can blame the Fed, and then he takes over the Fed in May and he can print out of it. I think we'll get some softer earnings probably from the US. I just think the next 3 months is a bit of a danger period, and I don't think we're going to miss out on much to the upside.
I told you we'd have some conflicting points of view on this market today. Mark Gardner, as always, thank you from MPC Markets. And Mark doing my job for me, foreshadowing the fact, teasing as we call it, that we've got our expert guests to weigh in on Temple & Webster today, Ben Clark from TMS Private Wealth and Henry Jennings from Marcus Today.
The money. If you're making $11 million in NPAT and talking about 580% increase in NPAT, sounds fabulous. $11 million? There's a newsagent in Avalon that makes more than that. The Thai restaurant makes more than that. I mean, come on. It just, to me, it just seems overs still, and the falling knife, I don't think I want to catch it because I've caught knives before.
Or if you're there, will you just hold?
If you're there, sorry for your loss. If you're there, I would, you're going to have to hold and hope.
Yeah.
And this could be a good buy at the right point, but you never buy on day one of a profit downgrade. It's tempting to do it, but it will, the small cap mafia as they're known, they will take a few days to clear out of this because there was a lot of fundies that really like this stock, and they are unemotional about selling if they see something they didn't expect or like, and there'll be an overhang for a while. It'll then take time for confidence to return, but I do think there's actually a pretty good business in here.
Thinking about your pre-Christmas shopping? What if you could buy some stonks on sale? Our final virtual event for the year is Cyber Monday. Join expert analysts live as they share their picks of undervalued equities.
We're looking at between 400 and 500% upside.
Because it is going to rally away very, very soon.
Beat the Christmas rush. Register now for Cyber Monday at ausbiz.co/cyber.
Looking forward to that. Looking forward to finding out what led this market higher. Because while we're obsessing about this inflation read, rightfully so, it was a positive session. Let's take it. Let's run with it. And Mesoblast was the best performer. Look, a volatile stock up by 13%. It saw its price target lifted 10% to $3.30 per share by Jefferies, and it upgraded to a buy that was enough to move the needle. Drone Shield making up some lost ground, more lost ground, I should say. Pilbara, PLS is what it's called now, up by 8%. And Zipco putting on 8% as well. Can't see any real big news associated with it, but the buyback continues there. Let's go to the laggards. Look no further than Temple & Webster. West African Resources is off by 6.5%. Greatland Gold as well, suffering a little bit today. And Life 360 along with Technology One. And Technology One is trading ex-dividend tomorrow as well. In the smaller end of the market, AFT Pharmaceuticals doing really well. Felix Gold and Calyx up by 13% to 64 cents. But there's the flip side, of course, and those that really didn't do well today: Invictus Energy, Veritas Mining, Aura Energy, Hancock & Gore, and Forestania Resources. That is an odd name. I don't think that's correct. We'll look it up in our system. Okay, let's get to what's on overnight, and we get the U.S. Fed Reserve's Beige Book that will provide a pretty good look at economic conditions across the U.S. nation. We've got growth in durable goods orders, so that's coming through. We'll see. The market is forecasting for a lift of 0.5% month on month. The Chicago PMI, though, continues to point to some downside risks. The market forecast is 43.8. Tomorrow, there's a lot of AGMs. We also have a Hub Investor Strategy Day. We get a third quarter update coming from QBE. And as I mentioned, Technology One trades ex-dividend. Well, let's take a look at this. So the last of the day's trades are through. The S&P ASX 200 lifting 0.8%. The week so far up by 2.25%. We've got U.S. futures pointing to a higher open there. Of course, we've got a lot of chatter around what's happening with the war in Ukraine. Look, fingers crossed. We get a peace deal reached. There's no deadline. The U.S. President Donald Trump said within the Asian trading session for a firm deadline for the Ukraine and Russia to reach a peace deal, although he did say that Russians are willing to make some concessions. So we'll watch for that. We'll watch for any chatter around interest rates. But it was a very strong session across the Asian region, including the Nikkei. Was up by 2%, with tech leading the charge there. So European Open is upon us. Let's wait and see what happens. And of course, we'll digest it all for you when we are live once again from 9:45 a.m. tomorrow morning, Thursday already. I hope you have a great night.